I decided to backtest this trading strategy 100 times after this trading strategy proved to be able to pass a prop firm challenge when I tested it a few days ago using FX Replay. In just 29 trades with only risking 0.5% per trade, we were able to achieve the 6% profit target needed to pass Hola Prime's one-step prime challenge for futures, which you can get 30% off of by clicking the link in the description. Before we get started, if you're serious about trading but uncertain about which prop firm to trust, here's the truth. Hola Prime is backed by NBA All-Star Karl Anthony Towns. They're the first to process payouts in as fast as 1 hour. They're the first to offer one-on-one coaching and also the first to publish price transparency reports. They have simple, fair funding programs and you can trade Forex, futures, or crypto with affordable account options and up to 95% profit splits. And if you're ready to start, click on the link in the description and use code Eddy30 for 30% off any challenge account. Let's dive in. During the prop firm backtest, you can see we yielded a 6% profit target, 41% win rate, with only a max drawdown of 2%. 29 total trades with 12 of them being winners and 17 being losers. An average RR of 2.5, which is what the strategy called for, but you'll notice something a little later when we take a look at the RR simulator on FX Replay. Tuesday through Thursday were our best days trading, and New York session was the better performing session. I'll leave a link to that video on the screen and in the description if you want to check it out, as well as the link to the original video by Simplified Trader in case you want a deep dive into the strategy. But before you do that, let's take a look at the analytics for the 100 trade backtest. Taking a look at the FX Replay analytics, you can see that the equity curve speaks to us immediately. It's got a clean, healthy incline, exactly what you want to see in your trading strategy. This trading strategy was tested from January 3rd, 2025 to April 21st, 2025, so about 3.5 months worth of data here. We gained a beautiful 50% profit using this trading strategy if we would have risked 1% and targeted the 2.5 R, but that profit would be cut down to 25% if we would have continued using the 0.5% risk we were risking during the challenge phase. The win rate was impressive at a 43% for a 2.5 R and is nothing short of fabulous. If we take a look at the risk to reward simulator, this shows what our profit and win rate would have been if we stuck to a specific risk to reward ratio. So we're going to go ahead and we're going to click on run scenarios, and you're going to see here our average RR. This is our current, the results, 43% win rate, $5,000 profit, 2.2% average drawdown. If we go down to a 1 RR, win rate would have been 60% with only $2,000 worth of profit, but only a drawdown of 2%. 1.5 risk reward ratio looks very, very nice with a win rate of 53%. But you can see obviously the profit was a little less, but with a 53% win rate, that would be absolutely fantastic. A 2 risk to reward ratio yielded a 47% win rate with only $900 less in profit, which gives you 4% win rate better than the 2.5 of the current RR. And as I mentioned earlier, there was something to notice here. Going for a 3R would have given us a slightly lower win rate, but would have given us an extra $1,000. And the profit factor would have been a 2, which is the highest here. So if you would have went for a 3R instead of a 2.5R, you would have gained $1,000 more, but risking that 3% win rate there. Moving on over to EdgeFinder to dive into some deeper analytics. You can obviously see the equity curve that we saw over on FX Replay. Here, the winners and losers. We had 43 total winners and 57 total losers. Max wins in a row was 4. Max consecutive losses in a row was 4, which is really good because for psychology of people, losing more than 5-6 trades in a row can be very detrimental to trading psychology. Taking a look at the performance calendar, this will show you how well each month performed, and I'll move through these slowly so that you can take a look. We have January, February, March, and April. Let's take a look at the daily performance breakdown here. You can see that Monday was our worst day of the week, with a 22% win rate out of 18 trades. If we would have eliminated Monday completely, we would have gotten a way better win rate. Friday was pretty bad at 35% win rate, but wasn't too terrible out of 20 trades. If you take a look at the session performance breakdown, you can see that New York performed better than London. 47 trades in New York with a 49% win rate, and London had 53 trades with a 38% win rate here. Now, I added something here to the EdgeFinder. It is a strategy simulator. So, for example, the daily performance breakdown and the session performance breakdown. I wanted to see how well this strategy would perform and what the stats would be if we only traded specific days that performed well and a particular section that performed better than the others. So let's choose Tuesday, Wednesday, and Thursday since those are the 3 best performing days. You can see that our win rate would have been a whopping 52% win rate with 62 total trades. But if we filter that and only consider trades that were taken in New York, you would see that our net gain would be $3,462 with a 58% win rate. But that comes with a drawdown of only having 26 total trades taken in the 3.5 month time period of testing. And of course, let's take a look at our trade log where we will go over some of the trades that were taken. We're going to go past 29 since that is the last trade that we reviewed in the last video that I made. We're going to go and we're going to take a look at some of these. Of course, you are going to be able to see the trade log in the description that you can download in the description of this video so that you can see every single trade that was taken. Let's go here and let's take a look at a loss. You can see that we had the Asia low right here. We took out the Asia low during London session. We had a fair value gap here that was created, and we had price close above that fair value gap, creating an inverted fair value gap. We entered at the retest of that inverted fair value gap. Price started to go up and completely moved in the opposite direction, hitting our stop loss. Taking a look at a win, you can see here we had our Asia low. We are looking for Asia low to be taken out during London session, which it does so here. After we take out the Asia low during London session, what we are looking for is we are looking for a bearish fair value gap to be created in that leg that took out the Asia low. And we are looking for price to close above that fair value gap, giving us an inverted fair value gap where we would enter on the retest. Here you can see on this candle, the specific candle right here, we closed through that fair value gap, giving us an inverted fair value gap. You can see that price comes right back down, retests it, hovers around a little bit, and just completely goes in our direction. Looking at another loss here, we have trade 75. You can see here we had our London high during New York session. We are looking for the London high to be taken out. Here we have that during New York session, the London high is taken out. We are looking for a bullish fair value gap to be inverted. You can see this bullish fair value gap was created here. And you can see that in this red candle here, price closed below that fair value gap, creating an inverted fair value gap. We enter at the retest, and you can see here that price almost tapped us in right here at this candle and would have yielded us a win. But instead it decided to go in the complete opposite direction and hit our stop loss immediately. We have trade 84 here. That was a win. This was a very small inverted fair value gap, but there was still a gap in this 3 candle sequence. You can see that we had London low right here. During New York session, we are looking for London low to be taken out. A bearish fair value gap created in that leg that took out London low to be closed above with a bullish candle, which it did right here in this bullish candle. It closed right above that very small fair value gap, giving us our inverted fair value gap. And you can see that we entered in and price moved in our direction immediately and immediately reversed from that take profit area actually. You can see here that trade 100 was a loss and trade 99 was a win. Trade 99 was quite nice. You can see we had our London low, and you should already know the rules of this strategy. During the New York session, we are looking for that London low to be taken out, a bearish fair value gap to be created in that leg that took out London low, and for a bullish candle to close above that fair value gap, creating an inverted fair value gap right here, and we enter on the retest, which was this red candle here, and price immediately moved in our favor. The last trade here was a loss during London session. You can see we had our Asia low. Price took out the Asian low in London session. We didn't get anything, and then right here you can see that there was a bearish fair value gap created, and what we're looking for is a bullish fair value gap to close through it, giving us an inverted fair value gap where we would enter off of the retest, and it did give us that inverted fair value gap with this candle closing through it. You can see that this candle came down, retested us, went down a little bit, went up, almost hit our profit target, and reversed in the opposite direction. Now, here is our last example here. You can see that we have Asia high. During London session, we have Asian high taken. We have a fair value gap, a bullish fair value gap created here in the leg that took out that Asia high. And you can see we are waiting for that fair value gap to be closed below with a red candle, where we would be entering off of the retest. You can see price closed below that fair value gap, creating our inverted fair value gap, and we entered at the retest, and price moved into our direction immediately. Now, in my session notes, I did mention that there were a couple of trades that would have won if our stop loss was actually placed above or below the wick. For example here, what he tells us to do is put our stop loss at the body of the red candle here. But if we would have placed our stop loss up here, we would have been kept into a bunch of trades that hit stop loss here. So here you can see that the stop loss was hit, but actually after the stop loss was hit, price completely moved in the opposite direction, giving us a win. Now, if we would have placed our stop loss here above this high, then what that would have meant was that our risk to reward would have been a little off. So 2.5R that we are going for would have been a little bit further away. So in that case, if you wanted to capture some of these moves, what you would do is move your risk to reward ratio from a 2.5R to a 2 and give your trade a little more room to breathe. I think there were about 6 or 7 trades out of the 100 that where price came down, took the stop loss, and then completely reversed in the opposite direction, but it didn't take out that low or high of the wick. But I don't think that it is worth changing the rules to this strategy to just capture those 7 wins. Yes, that would have been a couple $100, but regardless of the fact, this strategy is completely worth backtesting yourself, and I would highly suggest that you do so, maybe with a 3 risk reward ratio, or what I would do is I would actually stick with the 1.5 risk reward ratio. If your trading psychology does take a hit every so often, you would have a nice risk reward ratio of 1.5 with a 53% win rate and $3,250 in total profit. Now, one of the things that I did mention in my last video is that in order to get these results, you would have to trade both New York and London session. But as you can see here, if we're looking at the session performance breakdown, New York session actually did perform better with a 49% win rate. But London session did still give us a 38% win rate and still gave us a profit of $2,200. So my suggestion for this trading strategy is to pick a session, whether it's London or New York, to trade, whichever works best for you. And there you have it, guys, a nicely executed mechanical trading strategy that is simple to learn. I highly advise that you watch my original backtesting video where I go in depth with the trading strategy and what prop firm rules were followed in order to pass. I like this strategy so much that I think that I might try a real live prop firm challenge using this strategy and post videos of every trade that I take with the strategy. How does that sound? Let me know in the comments if that's something that you would like to see. Maybe we'll do a poll and have a minimum vote count of at least 50. And if we can get at least 50 people to vote, maybe we'll take this trading strategy and maybe we'll go ahead and we'll try a real prop firm challenge to see if we can pass it and see if we can get a payout. Thanks for tuning in, guys. Take care. I'll see you in the next one.